So we'll carry on with the programming. And now we have, regulation. Look at that. That's great conversation about regulation. I'm going to call up to moderate Richard Maton.
Great. Hi, everybody. So I will call our panelists. So Adriana and Anastasia, do you want to come up on the stage and we'll get going? Thank you very much for making it to this point. Congratulations. Only 30 minutes to lunch, so well done so far. And we're going to have before we get there, we're going to have a conversation around where is DeFi in the context of crypto regulation and Web3? What do we think are the key challenges, issues? Where is the crypto regulatory framework, and what do we think needs to be done? And just before getting to that conversation, some introduction. So my background is very much on tech products around risk. Have been a co-founder, worked with investors on early stage, growth stage. I'm very active with solving problems for CeFi, looking at DeFi and Web3 in the context of risk, and building the kind of right networks between those firms who are thinking seriously about those issues. Obviously, they all do think seriously. Well, some do, some don't. But also, because I've done work through kind of various not-for-profits with regulator innovation, there's the role of the regulator, and one of the key issues we'll talk today is about how we see that changing as being more dynamic and agile in this very complex area where we just don't know the answers. We're going to have to test, and there'll be a lot of trial and error, so how important that is. So that's a bit of context. So maybe, Anastasia, if you just do a little introduction before we get going.
Hi, I'm Anastasia Kinsky, Head of Programs at GBBC Digital Finance, and we are a members association working on industry standards and regulatory outreach, policy advocacy, and looking to build responsible innovation. So our members range from FIs through to crypto-native firms, enterprise blockchain, and yeah, we'd like to bring together the ecosystem to drive forward these conversations.
Great. Adriana.
Good morning, everybody. I'm Adriana Ennab from Credit Suisse, and I work in public policy covering all the digital topics, which obviously includes crypto and CBDCs and data, cyber, anything along those lines. So I've been very lucky on the digital topics to be working together with the regulators to develop that future and to make sure that we aren't over-regulated, but that there is a support network there, which we've been working closely with the FCA, the Bank of England, HMT, and then also with the European Parliament, Commission, and NCAs.
Great, thank you. Before we get going, there will be a Slido, so please do post your questions, and we'll do our best to get through those. But I'm going to start off, Anastasia, perhaps with, you've done some work specifically around DeFi, and produced the report that looked at a kind of regulators' perspectives, an outline of kind of where the risks are and what that means for the industry. So perhaps you could start by giving us, your view of, what those issues are when it comes to DeFi and regulation.
I think the key thing to understand with DeFi regulation is that we're quite a while away from that being a clear framework, as it were. That is not to say that constituents within the DeFi ecosystem will not be regulated. I think perhaps even that's how we'll see it all build in any case. But whether you're looking at stablecoins issuance, where consumers need a reasonable understanding that those coins would be stable, or oracles, the way that the governance structures on DAOs, the legal wrappers that can be used for DAOs, whether or not the token holders understand what their voting tokens mean, that's where we may see that's where we will see the regulation focus. And for that matter, it's not very different from the rest of the crypto ecosystem. You've got to look at the existing regulatory framework, see where it applies, and then build appropriately where you do need new approaches.
I mean, I think that's a key point, isn't it? It's not that it's not regulated, because there's all sorts of interdependencies, and we clearly see lots of actions happening already in terms of enforcement that are affecting DeFi projects already. But I guess we've seen in jurisdictions the developments of kind of broader crypto frameworks, right? And I guess one of the issues is what do you see as the peculiarities of DeFi that are should I say problematic with regulation?
Yeah, it's whether or not, does it all sort of slot together properly? When you look at the activity and you can definitively say, well, that's lending, and it should be regulated as lending. Number one, there will be some elements in which the lending activity has changed. For example, you may not have a buyer and a seller in these cases. That's how peer-to-peer pooling works. But more importantly, regulators are, of course, at the end of the day, they're looking for someone to hold accountable. And they're going to do that by looking at either who has the most control over the protocol or who is making money from it. And that is the reality. And I don't think that is the same as saying, the regulators don't really know what to do with this. I think they've been working very hard to develop that position. And the next step is understanding those. And if you do have cases in which you do in fact have a degree of centralization in a DeFi project, that's the way the regulation is going to go. We can certainly continue to engage, continue to focus on the knowledge sharing needed for the bits on the, that are different, where there is innovation that may be squashed if you try to push it into, square peg, round hole. But ultimately, same risk, same approach, and the old saying, if it quacks like a duck, it may be a duck.
Absolutely, right.
Talking
of ducks.
Yeah, I love that one, the Swiss. Yeah.
So Adriana, both Adriana and I were at the Digital Regulatory Collaboration Forum yesterday, which is 4 of the UK regulators that ran a symposium on Web3, where they were trying to look holistically at what is Web3, what are the opportunities and challenges in regulatory issues, and how do they work together to solve them. And I think one of the fundamental issue that came up around DeFi is this issue of, if it's decentralized, is there a responsible person, right? And one, it was Chatham House, but one of the major DeFi projects was there, kind of saying, well, in DeFi there is no responsible person, therefore you cannot apply the existing frameworks to that. And I don't. Adriana, what's your take from that view?
Yeah, I think one of the conversations is always that if there's regulation, that will stifle innovation, which I don't believe is the case. It's a matter of finding that balance. And because there are consumers that are at the other end of it, and you need to find the balance where it isn't over-regulated, but if you don't have any regulation and something goes wrong, then that is going to stifle the innovation, because that's going to shut the market down, or it's going to put people off from investing in it or moving forward with it. So I think that the UK and Switzerland, I think, was the first years ago who was looking at it and was quite far advanced in it, and looked at that, and they, it was Branson who had said the walks like a duck, talks like a duck. If there's a regulation that already covers what it's doing, so if it's payments, if it's under anti-money laundering or securities regulation, then let's use that. But let's look at where there are gaps, and then, if there is a need for regulation, how you, with decentralized finance, it's trying to decide, as Anastasia said, who it is that has to be regulated, but it is the, same risks, same rules, but it's trying to work out where that blame lays if there is an issue. But the fact that there does need to be something, I think, is 100% important.
Yeah, and I get, so there's clearly, why regulate? There's the issue, obviously, investor protection, market stability, all those issues. But there's a kind of a macro driver here, which is important for financial institutions, which is, we know that one of the fundamental problems is volatility, participation.
Yeah.
The industry wants to grow, and we see participation from parts of financial institutions, but for mainstream participation from financial institutions, do you feel that how much clarity does there have to be around that?
Oh, there has to be. I mean, it's not something that we're going to get involved in unless there are some a framework and some boundaries around it. So for it to, I think, be scalable on a wholesale basis, there need to be regulations. So now, we've got MiCA or MiCA, whichever way you want to say it, and then the UK wants to come up with something that will come into force by the time that the EU regulations are taking more of a Swiss perspective, which is if we already have something, MiFID or whatever else, then let's go with that. But and I do think that there needs to be that security and that, that protection for consumers and to ensure that market stability remains. I mean, there's so many advantages of it. And to be honest, I'm not sure, I know that, talking to people that I work with, they're like, well, why are we talking about DeFi? That's not something we're interested in. It's like, it's something that's going to happen, and we need to figure out where we fit in that ecosystem, and I'm sure that there will be. But we need to ensure, step away from DeFi, but looking at more at crypto, that there are regulations in place that we can actually work with, and a framework that we can work with. And I think that Libra and Diem, funnily enough, I think that sort of kick-started the whole, the stablecoins kick-started everything, and everyone started, said, actually, we now need to actually look at what's happening, and we need to move forward with regulations. My fear was that in the EU, it was being done so quickly because of fear of what could possibly happen without it being regulated. And, we were very involved with that, and there were things like, wanting to ban, so some of the political parties wanted to ban anything that was a proof of stake, because, or was a proof of work, because, of the energy. We said, you don't want to actually ban it because that will push it offshore. So what you want to do is possibly include it in the sustainability taxonomy. So looking at what works to allow that innovation to flourish, and then to have common sense dictate that movement towards something like, with the merge, where you're going to proof of stake.
To risk adjust.
Yeah.
I was going to say that the Hackney carriage licenses come to mind, where you have carriages, you must, for your horse, have an extra bale of hay, and the black cabs come in and everyone's using cars, and they issue the same license, which means that technically, for a really long time, technically all these taxis were outside of, they were not compliant because they weren't carrying around an extra bale of hay for the horse that didn't exist. And so no one is sort of saying that, well, many people in this ecosystem are not trying to say that they are above or different or should not be part of the regulatory framework. I say many, most. But you cannot, and you needed to have license for taxi cabs, but you can't apply the same one all the time.
Absolutely.
And so how can we think about the digital ways the sort of digitally native ways in which to risk adjust, and that includes, Tornado Cash. It is not that anyone is above sanctions. It is that we need to think about the clever ways of doing that, because it's got to be meaningful, and it's got to be impactful.
Yeah, which is why we talked about being agile. It needs to be very individual, and it needs to be movable, because it's not the same.
You can't, exactly.
Yeah. It's not one size fits all.
Exactly.
I'm glad you brought up Tornado Cash, because we've actually got a question that says that what happens in the case where there's no individual organisation to regulate. Well, actually, before we answer that, actually, at the event yesterday, Adriana, we had an academic and presented a kind of model of what decentralisation looks like, and the top right or top bottom was this kind of no authority, no information, and basically an academic view was that doesn't exist. Most of Web3, DeFi, somewhere in between, where there's some kind of organizational authority and information control, right, which is some degree of centralization, even though it's distributed. So that question is, I'd be interested to know what the use case example is where there's no individual organization to regulate. But what is important is that we are seeing clear actions, particularly out in the US at the moment, on DeFi projects. So Tornado Cash, sanctions. It caused, as we all know, it caused a lot of further questions to be asked around how that sanctions, those requirements are applied to that organization, to the assets that came out of Tornado, so what happened to all those assets coming out and all those issues. We've seen the CFTC take action against the DAO providing decentralized commodities protocol, where they basically said, well, anybody who took part in the governance of that DAO is liable for that. So they clearly identified individuals. Now, you can have an argument about whether that's the right way to do it, but organizations and individuals are definitely being identified in DeFi projects.
I think the UK has always been very good and very forward-thinking, the FCA, with the way that it's been working and with industry, but not just with industry, bringing industry, the regulators, and sort of the fintechs and the other members of this trading organization, basically. So with the crypto sprint, whatever, is looking at answering these questions, because it's all new, right? So we don't know we don't have a lot of these answers. So how do you work that out? Because you can't just have the banks at the table, because they're going to have one perspective. You can't just have the regulators. You need to have everybody in that ecosystem trying to come up with those answers, which is something that happened in the crypto sprint. There were just 3 use cases, but there will be more. Trying to really work out, okay, we don't understand, put our hand up, let's work out how we deal with this. As opposed to just saying, right, it's a little bit like, the shoe bomber. Ban shoes, liquids, ban liquids. So it's very reactive, and that's not how it should be. It should be, let's look at, a little bit like we've been working on projects on wholesale CDBCs with the Banque de France and the Swiss National Bank prior to there being even any start of a legislative proposal. Let's try and work out how these things work, what doesn't work, what some of the issues could be, and then develop around that. And I think that's the right way of looking at it.
Yeah.
Well, absolutely, in looking at the social utility there, first and foremost. And, I think when it comes to, I think it's interesting you said it was clear. It's a pretty blunt tool to be clear, but it is a really clear signal from regulators. We're going to bring you into purview, and we're going to take action. And so you're going to have to find a way around that. I think for DAOs, the answer is going to be in legal wrappers. It may be a case of finding the least worst legal wrapper, and then let's talk about how that needs to be adapted if we need to adapt it. I think the market will lead the way on this, and I think consumers are not necessarily, I don't think the majority necessarily want full decentralization, dare I say it. A lot of the benefits of decentralization are very, very clear. That said, I think you're right. There are many cases in which there is a centralization in terms of organizing the information sharing, organizing, having the controls over the protocol. The question is how much of the market is going to end up in that camp versus the totally decentralized camp, because crypto is not the only space in which anyone can just build. I hate to compare our industry to gambling, but it is perfectly possible for me to develop software for gambling and just put it online. But we found solutions around that because we decided actually it's quite important that you had a license for it. Then the question is, do we put that on developers or not? And then are developers the people who are held responsible? I think that would be a very difficult thing to do, and I'm not sure I totally agree with it. However, again, when you look at the regulatory developments happening outside of crypto in the EU, you look at the AI Act, you look at DORA, that seems to be the direction of travel. And so it is about how you either engage on alternative solutions there or start to work around those perimeters.
Yeah, absolutely.
Or work with them, rather.
Yeah. There are some questions coming. Please keep them. I'm going to bring the questions in actually as we get through the discussion, because these are great questions that have come up. Teaser, spoiler alert. But I'm going to bring them in a bit later on. But please keep firing your questions through. So I guess that issue, and it's a fundamental issue around DeFi and DAOs. And I'm glad you brought up about the legal frameworks, because we haven't really spoken about that. But that issue around DAO, the legal status, obviously there's work in the UK that's underway to provide clarity, or to provide a dedicated legal framework for DAOs to solve some of these issues, particularly around liability, right? Because so many of them by default look like limited liability partnerships unless they come in a limited company. And in fact, part of the problem in the US is the DAO was not set up with a separate legal structure, which, is, if you haven't done that, then highly recommend you do that, given just what happened there as well, if you want to operate in the US. And then obviously, I think one of the other issues, clearly, that there's some legal work underway, is around the status of digital assets, right? So from a consumer perspective, what are my ownership rights, contractual rights around my digital assets, right? When it comes to disputes, and we've seen that play out clearly in the car crash, right, of Celsius and all those related counterparties as well, and other areas as well. So these seem like fundamental requirements that need to be, Adriana, as you said, considered and put in place as part of a legal and a regulatory framework. Yet, the world moves so quickly. You have these kind of reactive actions by regulators to fix, burning issues, right? Like sanctions, like AML, right? You see the SEC calling everything a security, right? In the US, right? So there's something else happening there, maybe, right? Which isn't a burning issue. Maybe some politics, right, around there as well. I guess one of the issues then is, so you have a kind of like an enforcement-led type of approach from the US. You have more of a framework-led approach from the EU. I mean, Adriana, and then we have the FSB recently publishing and saying, well, we kind of have to have a coordinated approach on this, because otherwise we're going to have this confusion. There's going to be lack of clarity. And so one of the questions is if I'm running a DeFi project, where do I go to understand this, right, and all those nuances? And the answer is, it's very hard, right, to go somewhere. There's no single source.
Well, you need to look at whatever the regulations are in the country that you're operating.
But how important is this coordination of response, and what do you think the dangers are if it doesn't happen, perhaps doesn't happen a bit sooner rather than later?
I mean, very important. And I think on all the digital topics, it's incredibly important. When we first started working on on all the digital topics, on AI, it wasn't crypto a few years ago, but on everything else, on data sharing, it was sort of, there was this whole kumbaya moment of everyone working together because, there were no borders. And then it seems there's more sort of protectionism now and people putting up walls around themselves. And I think with all of these things, they need to be lifted up to a higher level. So at global standard setter level. So for instance, the BCBS working on the prudential treatment of crypto assets. Now, that was quite a long journey, but they were fantastic at working with us because it started off with the first consultation was pretty much everything was a Bitcoin. Everything had to have, 1,200 whatever capital charges. It was absolutely, and so my guys were like, this is insane. It's like, well, there's an education process here. Yeah. So we sat down with them and then we decided to respond as joint trade associations because we wanted to have a really in-depth response. And they were incredibly happy with this very detailed report that we gave them, explaining to them some of the regulations that are already covered, some of the transactions that we might be involved in, and why there was, there should be different tiers of what, the capital charges that we should have, and not everything should be charged as Bitcoin, because there are things that are transparent and permissible, and it could be followed. So we have now had several, they're now on their second, we just finished the second consultation, and we've had several roundtables with them, because we said we need to sit down with you, with industry, and explain this stuff to you. You can ask us any questions. So the BCBS made up of all the different regulators, and we've been doing that. The FSB now looking at it from a financial stability point of view, the same thing. And if you don't do that, you have the risk of regulatory arbitrage, and which is a huge problem. It doesn't mean that the individual countries are going to abide by, because these are suggestions. They're not regulations that come down from the global standard setters. But because the regulators are all sitting at that table, they should then walk away with the same understanding, and they should have something in place. It doesn't have to be identical, but they should be interoperable, and they should be able to talk to each other. So you should be able to go from one country to another without being able to to basically play one against the other.
Yeah, great. And that's a question that's come up. What about regulatory arbitrage? Yes, exactly. That is one of those key risks, right? So we've only got kind of 5 minutes left, and we've got some questions coming in. But I want to put those in the context of kind of, well, how do we move forward, right? Because we know it's lots of the questions. It's complex, different rules, and I think one of the key areas we see is the ability of regulators, no, not just financial service regulators, policymakers, to actually interact more effectively with the industry as it grows and evolves. And maybe, Anastasia, because of this seems fundamental to the work you do at GDF, so perhaps you could give us a perspective about like what is that principle and how should it work? You know, what's the role of industry in that?
Absolutely. Well, at GDF, we talk a lot about co-regulatory environments.
Yeah.
And I was recently asked what the difference between co-regulatory and an SRO was, and I think, really that's to do with the extent to which you report back to the regulator. But we are here to create forums and to create programs in which the regulator and the industry is truly building together, and also the industry understands what industry-led initiatives they can be promoting, whether that is standards, frameworks, either to aid in the harmony of regulatory differences or actually in the absence of regulation. But really focused on exactly that knowledge sharing point of where industry needs to understand where it sits in the bigger landscape, but also where regulators need to be engaging on the digitally native and forward-thinking and non-reactive side of regulation. So part of how we're doing that is through building out our RegDAO idea, in which we would set in standards for the DeFi space that would work, that then would be digitally native and usable. Also then demonstrating the ways in which there are solutions in DeFi for embedding KYC, for example. We can, okay, we'll always be looking for one party to hold responsible, but also there are other ways of doing this. I think, what that promotes as a structure, this co-regulatory position, it promotes being incremental, taking it step by step. Don't try to boil the ocean, because, number one, there are too many different aspects to this. Number two, all of it is finance, and therefore kind of none of it is finance, or some bits do or do not sit in finance. And number three, by the time you finish boiling that ocean, there'll be 3 other oceans to deal with. So take it step by step, and that's okay. And I know this is a question about stablecoins. So look at stablecoins and think about the applications and build it out according to what you want the application to be. But it also, it promotes that environment in which you're doing it together and industry can feel engaged and heard in that building.
Great.
I have to say, just the one thing I saw there, which was interesting about the fire, which is very interesting. The fire safety in cars. So it's the same risk, same rules, but very different context. DeFi versus TradeFi. Fire safety in cars is governed differently to fire in the home. Both are fire risks. So there is that, and that's why I said it's not the same. It's not the same. You can't apply the same thing across the board. Yes, same risks. So there has to be like that overall parameters, but fire in the home is regulated differently from fire in the car because it has a different reaction, it has a different effect, it has a different way of monitoring it. So in the home, you would have fire detectors. You wouldn't have that in the car. That would happen in the engine, and what do you do there? And you do certain checks, and so there has to be adapted to the situation around it. So that's why we're saying from the beginning it has to be agile and adaptable, and you need more regulators that understand it more, and more conversations with industry and with the startups.
Great. Well, yeah, we're almost at time. So just to give a perspective on that, I think so. We traditionally see in emerging areas of financial services the industry participants coming together to understand risks, share those ahead of regulation, and we saw that with crypto very early on, right? But that seems even more important given the complexity and scope, and it's not just financial services, it's the legal. So that's important. And I think, Adriana, on that agility, you've been involved in innovation with the regulators. on very practical projects to help them understand and test us together. And that has to be the approach with DeFi and crypto more generally. And with initiatives such as the Crypto Tech Sprint, where they're trying to get early engagement on policy, that seems to be the right approach, where the agility is not just afterwards, oh, well, how do we fix the problem, but how do we understand the problem and have effective mechanisms like GDF and other organizations who are aggregating that understanding of risk in a very dynamic. Without those mechanisms, that approach, it's going to be a lot more pain, I think. So anyway, thank you so much, and thank you very much for your questions. And Peter, thank you very much for the opportunity to speak today.
Thank you.
Enjoy your lunch, everybody. Thank you.
Thank you.